Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're experiencing some selling pressure for a second day. And if you look over the last week, we are now seeing the 10-year note futures lower 4 out of the last 5 trading sessions, pushing down to a 1-month low here today. September future 117.29, so ticking back into the 117 handle here today. And I think when you look at some of the factors contributing to why we're realizing this selling pressure today, I think the focus certainly was on the ECB and their policy announcement, which I think was viewed as a little more hawkish than what was anticipated, particularly President Lagarde's tone towards inflation, not only short term, but longer term. Now, it looks like the ECB's forecast for inflation were extended out. And that, I think, had an impact not only on the bond market within the Eurozone, but also from a global perspective. When you look at the treasury markets here in the U.S., we're seeing quite a reaction here today to, I think, a shifting narrative. Now, the Fed is in a quiet period. We're not going to hear from the Fed till next Wednesday. However, we do get a key data point tomorrow, CPI, so the market, I think, is setting up for the potential for that as well. And when you look at the dynamics here in the pricing structure in the treasury markets today, I can tell you that the 10-year note yield is up 2 basis points day over day to 305 basis points, so pushing back up to a 1-month high. And the yield curve is flattening today. So if you look at the 20s and the 30s, you're actually seeing those yields coming in slightly today. The 10-year up 2 basis points day over day. But if you move towards the front end of the curve, particularly the 1s and 2s, and well, even the 3 years, we're seeing heavier selling pressure, pushing those yields higher, flattening that yield curve. We are now seeing the 3 years and the 5 years either at parity or above or inverted when you look at the 10-year. So again, shifting in that yield curve pretty substantial today as we head into the CPI data release tomorrow.